Payday loans are small amounts of money borrowed with the condition that the full amount will be repaid on the next payday. These loans typically have high interest rates, ranging from 15 to 20%, due to their short repayment period. The processing time is relatively low, usually taking no more than a day from application to funding. To get a payday loan, the first step is to find a lender with low interest rates and a flexible repayment period, which is crucial, especially for those without a fixed payday. Once a suitable lender is found, the next step is to fill out the application, which is often available online, and submit truthful information, as most lenders conduct background checks. After the application is submitted, the lender will process it to determine if the requested amount can be granted. If approved, the funds are deposited into the account, usually within 24 hours. Payday loans can be a fast and convenient way to resolve financial difficulties, but they often come with hefty interest rates. Therefore, it is essential to conduct thorough research to find the best option.